Today, you're going to hear about China Evergrande's collapse in 6 minutes. And with that, let's go. The best article I can find is actually by Reuters, and this actually has a great timeline that you can follow. The problem with China Evergrande has always been there. It is not new, but this collapse has been a long time coming and it has finally happened. So China Evergrande is China's most indebted property developer. It has close to 2 trillion in terms of loans in Chinese renminbi. And if you convert that to US dollar, that's about $310 billion. In August 2017, China Evergrande vowed to cut its debt for the first time, aiming to slash net gearing, which was then at 240%, all the way down to 70% by June 2020. Later in this story, I'll be sharing with you a bit more. It seems to me they already had insight that there is a target to meet in 2020. In November 2018, China's central bank names Evergrande as one of the few financial holding conglomerates on its watch that could cause systemic risk. Why? Because when a company has so much debt, it's going to impact a lot of people when they default. If I'm not wrong, they have borrowed from more than 100 Chinese banks, big and small. So once they go into default, a lot of companies can suffer, and that causes a snowballing effect. That's why it's a systemic risk. After that, I'll pivot to PwC's article because it's very relevant in this context. In PwC's article, how Chinese developers, their lenders, and debt funds should position themselves in 2020, we can see that they have mentioned that COVID-19 outbreak has no doubt placed additional pressures on developers' cash flows and their ability to finance operations. They have further shown us that sales was actually poorer because of COVID-19. 2020's number is 27% lower than 2019's. And later we'll understand the ramifications in terms of cash flow to a property developer. If we move further down on the article, we realize that they've also highlighted that Chinese developers' leverage ratios have actually grown by 20 to 35% over the last 5 years. When measuring total assets over equity, the top 10 developers have a 5.5 times ratio. And when you have that, it's always a game of juggling balls. Once a ball falls, everything comes crashing down. And what can we realize in this section? PwC mentions that Chinese developers have traditionally financed their working capital needs to purchase land, build, and hold completed developments by raising cash from deferring payments from construction costs due to contractors. Again, contractors are small companies that are also going to suffer from this fallout. They borrow from banks and issue bonds overseas and onshore. And they also receive deposits from selling residential units to buyers, often prior to completion of the project itself. They've also mentioned that China real estate developers have increasingly been reliant on pre-sales as part of overall funding. And if we look at what they have to present, they've mentioned that developers are now starting more developments than they are completing. So again, you start, you collect money, but you may not finish. That is why there are so many ghost buildings in China that are not completed, some of which have been idling there for 20 years and been forced to be put down. Then let's move back to Reuters' report. We realized that in August 2020, Chinese regulators meet with 12 major property developers, including Evergrande, to introduce caps for debt ratio. And this was dubbed the 3 red lines. What exactly is the 3 red lines? Firstly, it's an implementation of 70% in terms of liabilities to assets. Remember in 2017, China Evergrande had a target to reach in June 2020 70%. Very coincidental? They probably were aware of this 3-year time frame to get things in order. What is also inside the 3 red lines are 100% cap on net debt to equity and a cash to short-term borrowing ratio of at least 1. So back to the first point of 70% ceiling on liabilities to asset. This further graph shows you that they have indeed appeared to clamp down on total borrowings that is in the pink line over there. However, that appears to me that they are making some accounting magic and moving liabilities to other segments of the balance sheet. Because if we look at the black line, their total liabilities have only increased. But markets started to get spooked by Evergrande as early as May 2021. That the collapse is not recent. I'd like to highlight a particular point where the bond price actually increased slightly before the collapse. This part over here, which I'm pointing in orange, always suggests that market is going to inch up first before a collapse. Take note of that. That is typical market action. If we follow back Reuters article, we realize that in September 2020, China Evergrande has been offering 30% discount on properties for a month to push sales. Why do they need to push sales? Simply because When they sell property, they collect cash. And just now what we understand is pre-sales is a key component of solving their cash crunch. And once that is also removed, they are going to get into bigger problems. More and more news media start to catch wind of China Evergrande's problems. This is in Straits Times, October 2020. Danger is lurking in China's real estate sector. And China Evergrande again is being highlighted as the world's most indebted property developer and possibly going to face problems. In July 2021, a court freezes 132 million yuan in a deposit that is owned by China Evergrande. And this is actually China Guangfa Bank. In that month, more banks declined to extend loans to buyers with more than 2 China Evergrande's uncompleted residential project because they can already smell that if it's going to go into default, the homes are not going to be completed and that people are going to default on the bank loan eventually. And in 1st September 2021, founder Hui Ka-yan has actually pledged to assure buyers that they can deliver their homes even with their mounting debts. Now this is the first part of this whole story. I'll be covering more in detail whether it will become a contagion to global markets. If you are keen, smash on subscribe, stay tuned for it. Again, if this presentation has helped you, smash on like button. With that, I'll sign off from here and see you in the next episode where I'll be covering more details on China Evergrande's story.